Hey everyone, welcome to this session of Unshakable Living, where we take those shakable aspects in life and get it to that unshakable state. So in this session, first things first, I want to give a major shout out to our editor. So all these things that fly in, the shaking of the screen, Fabio has done an amazing job with that. So please continue to do that, Fabio. I know that I love the way the videos turn out, and I hope you do as well. Feel free to leave a comment on some of the edits, the ones you like. If there are any you dislike, just leave that out. Put all the things on there, but that'd be great to see in the comment section. And actually, one of them that Fabio did in our very first video was we had the quote from Mike Tyson. Everybody has a plan until you get punched in the face. And he had this glove pop in that he animated. Loved it. In fact, now you can see I got the real one behind me. Or, to get you more of a close-up, we got one right here. So got these gloves made, thought it was a great idea. And why do we have these? For a couple reasons. One, people make mistakes in life because they don't know what they're doing. And that's the purpose of this book, The Class, a financial course you wish you had in school. It's trying to give you some of those answers so you don't make the mistake and get punched in the face with some reality that really hurts you. The other side is a lot of times when people talk finances, they sugarcoat it. They don't try and really hit you in the face with the reality of what you should know. That is the whole premises of what we do here is we want to hit you in the face so you know what you need to know so you can make the right decisions as you get out there. So, gloves off. Let's dive into this next section on protection. Last time we did the disability. This is the life insurance side of it today. This is going to be a multiple video session because we have a lot of different areas on life insurance. Again, for some people, they don't like the topic because it's talking about you or somebody you love passing away. And you want to get that protection. Not the most enjoyable conversation, but don't make that fatal mistake of avoiding it just because it's an uncomfortable conversation to have. You want to make sure that you and your family are taken care of if the worst case scenario happens and you don't show up at home yesterday. Never want to jinx anyone, so whenever I talk life insurance, something happened yesterday because we know it didn't happen. All right, so today we're going to dive into, on this session, what you should protect because a lot of people are unsure on that side. They'll go in and talk with somebody that does life insurance and they'll say, oh, my agent said get $1 million worth of coverage or get $2 million or get $500,000. They go, yep, sounds good. And they just take it. Problem with that is those that don't have the number following things that it should be taken care of for the family, sometimes it's not enough. And in another case, it's just too much. So you don't want to pay for something that you don't need. And on the flip side, you definitely don't want to have your family suffer because you didn't plan it out correctly. So today we're going to hit these, which are the survivor need sheets that I give out to my clients. I'm sure you couldn't see it on there. Great thing because we have a good editor. He's going to pop these up on the side here pretty soon, one by one. However, if you want a copy of this, email me, which Fabio I know is popping up my email, and send it saying I would love to have the life insurance survivor needs checklist. More than happy to send you a copy. I also got a little feedback on some others. The budget worksheet that we ran through before, it's currently not on the website. I'm working on getting that on our website, which Fabio, you can throw our website up here as well. I'm going to get those back on there, but until that's on there, same thing, just email me and I can get you a copy of that. So, moving forward, let's talk about what should you get in place for your life insurance, or what are those things you need to say yes or no to. Number one, last and final expenses. So last and final expenses, what are those? That's your funeral, and then deciding if you're going to do the burial plot, tombstone, and get buried at a cemetery, or if you're going to become cremated. On either one of those scenarios, there is a big expense to it, a lot bigger than most people think, especially when you have a funeral. Even getting the funeral hall or wherever you have it, that can have a larger expense. If you go down the burial, tombstone, cemetery route, that one is usually $35,000 to $40,000. Go the cremation route, usually $10,000 to $15,000. So, I usually recommend to most clients, you don't want to give that expense to your family. Take care of it, and life insurance is a great spot to add that in. So go in, check in, yes, I want to cover this, no, I don't. If you said yes, put in that number, so that way you know what you should add to that death benefit amount. Number two, do you want your family to stay in the same house? If you own your house and have a mortgage, Usually this means take a look at that mortgage balance and look at it today, not in 10 years, because again, if the worst case happened yesterday, we need to take care of the liabilities that are out there today. So what is that mortgage balance? Maybe it's $300,000. That gives you an idea of what you should take care of and protect. If you are leasing or renting, usually take a couple of years of that rent or lease amount and put it out there. Is it 2 years? Is it 5 years? You can decide, but get a number out there so again, family can stay in that same location for a good period of time. Now, speaking of that, when these lump sums come in, because a lot of times they're like, so if I say I want for the mortgage, does my mortgage just get paid and I don't have a choice if I'm the surviving spouse? No, you still get the lump sum of money, or they do, to kind of have a funny analogy, but not so funny, it's just like winning the lottery. When somebody passes away, you get a lump sum option, or you can get a payment option where they pay you installments with a small amount of interest. In almost all cases, take the lump sum because the interest they pay on them right now, unless it dramatically changes in the future, it's not worth it. Get the lump sum, then you can invest the remainder and decide where it goes. But when you get the lump sum, it doesn't say you have to pay the mortgage. However, we want to make sure, again, for our families that they have the funds there so that way, yes, they can pay that off and eliminate that liability. Third, paying off any other debts or liabilities. So any other main loans, student loans, auto loans. If you have big credit card debt, put those in there. Any of the little ones, don't worry about too much. But let's say you add them all up and it's another $50,000. Put those in there as something that should be wiped out. Most of the time, again, I tell you all the time, nobody needs life insurance, but most people want it. Because I know I don't want to leave my family worse off than when I was here financially. And if I don't pay these liabilities, what did I just do? I left them a lot worse off because it was my liabilities, or maybe even my spouse's, but I want to help out on that. So I want to wipe those things out, clean slate. Again, your choice, but that's what most people I find want. Fourth, funding education. If you have kids or are planning on having kids, a lot of people want to put some aside for education. Now, again, it doesn't need to be used for education. Maybe it's used for helping out on their first home, helping out on a wedding, helping out on a car, whatever. That's out there. But for fun and education, usually just break down, look at what you want to protect. Maybe you want to protect or have 2 years of a 4-year college, state school. Go find out what that number is and put it together and get it on there. If you need help with that, feel free to reach out or talk to your advisor. They should know what the cost of colleges are in the area right now, or even across the country. Fifth one, emergency reserve. So the emergency reserve, most of the time when people pass away, it's unexpected. So that means we didn't have everything planned up to a T. Okay, yep, here we go. Tomorrow's the day. It's, hey, this came out of nowhere. Emergency reserve is a 4-month reserve of your income to buy that time to say, okay, yes, this was out of the ordinary. We need a little bit of time. I usually recommend have that emergency reserve in there, that 4 months. So if you make $10,000 a month, put in $40,000. That way it just, again, buys that beginning time right after, the unfortunate event. 6, charities or other bequests. So a lot of people have a church or an organization they really care about. Maybe it's the Humane Society. Maybe it's Sheer Care's Buddy Bench. If you don't know about that, check it out. The MAC Fund, all sorts of things that you could want to donate to. With life insurance, what's great is for usually a fraction of the cost, you can get a large amount that could be donated. So a lot of people like having this in there, so that's kind of leaving a little bit of their legacy. Up to you, yes or no, do you want to have it in there? If so, how much? And then I would make sure that gets updated in your will or trust where it's going. 7th one, surviving spouse income that they'll need. So let's say you got a household, and just for simple math, both spouses make $10,000 a month. So you have $10,000, $10,000, $20,000 total. One passes away, and they have kids. The surviving spouse says, hey, if this happens, I plan on continuing to work, which in a lot of cases people do. However, think of that spouse that is no longer there. What do they do to help out with kids or other things in your household? If you're still working full time and they're not there, what is the cost going to be to replace that? Is it the full $10,000? to get extra support? Are you stopping working? So think that through. It's a very important part of the process on this. Figure out how much that should be. So what is that number? And then the last one, number 8, on that number, for how long do you get that replacement coming in? Usually what I'll see is if people have younger kids, let's say a family has a 5-year-old and a 3-year-old, they'll take till age 18 of the younger child. So in that case, 3 to 18, 15 years would be that income that they want multiplied by that number. Some people just say, let's do this for 5 years, let's do it for 2. Again, your choice. So those are the 8 key things that I share with my clients on what they should have in place for their survivor needs and decide, yes, I'm doing this, no, I'm doing that. But again, now it's your life insurance, not the insurance guy or insurance gal's insurance policy. With that, next session, we're going to start breaking down the different types of insurance that you can get with your life insurance options. There's term, there's universal, there's index universal, variable universal, whole life. So as you can see, there's a bunch to choose from. Let's get those figured out for you. With that, if you're liking these things, again in the editing, make the comments below. Like I like saying and ending these now. Hey, just continue to build a meaningful life and stay unshakable, my friends. Till next time.